Live with the mortgage calculator. We'll get started here in just a moment. Just give us a few minutes to get live on all the different platforms. We are streaming this live on YouTube, Facebook, and LinkedIn. In the meantime, feel free to drop a comment there as you tune in. I see some people already dropping comments. Thank you, Julio, Sandra, Warren. Thank you all for the comments, and we'll get started here in just a moment. We're going to go through some live rates, and then we're going to do a deep dive into a loan topic here. So just a moment. Let us get set up on all the channels. Again, in the meantime, please drop a comment there as you tune in. Jason, Nicole, Victoria, thank you for putting comments in there. Dario, thank you for the comment. All right, it looks like we are all good to go. As we go through here, feel free to keep dropping comments and then ask any questions that you would like Jose to answer as we go through the deep dive topic for today. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every day on this show is go through some actual live mortgage rates for different programs. Then we do a deep dive into a different topic every day. Now, today's deep dive is something we're familiar with here at the Mortgage Calculator because we specialize in these non-QM loans. And today's topic is going to be bank statement second mortgages. So our sales manager, Jose Gonzalez, with 28 years of experience as both a loan officer and a realtor, is going to do a deep dive into that here shortly. But before we do that, let's do what we do every day, which is go through the actual live mortgage rates. So Nick, let's pull up our pricing tool and see what the rates are looking like this morning.
All right, let me switch my screen. And we'll check it out. So as Kyle mentioned, this is our pricing tool. This will show us the general rates and the APR. For today, it is September 7th, just after 11 a.m. Eastern. So most of our programs are live with new rates for today. If you would like a full breakdown of all the fees that go into the APR, a full loan estimate, please get with one of our licensed loan officers. We have over 300 licensed loan officers in 24 states. So for today, we will set up a scenario that we can compare across the different loan programs. So we'll set all our demos today to a $400,000 loan amount. We'll set the LTV to 80% loan to value, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point to cost. And then we'll go through our different options here. We'll start with conforming conventional, and then we'll check out FHA, which is usually the second option for most borrowers. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs using alternative income, like our topic for today. We also offer VA and USDA. VA is only for eligible vets and active service members. So if you are eligible, let us know. Not everybody is, obviously, so we don't do that live. And USDA is only for eligible properties. So if you do happen to be shopping in a USDA eligible area, let us know. We can quote it, no problem. So we'll start today with conforming conventional. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, Miami-Dade County. And for all the demos today, we'll use an estimated FICO of 760 and an estimated debt-to-income ratio of 40. So with the settings that we do every morning, let's check out the rates today. Looks like it went up just a touch, 7.375. 1 discount point in cost puts our final APR at 7.542. Now remember, the APR takes all the costs into account, and that allows us to compare across the different programs. So this is a good option for our conventional. It's just a touch lower than it was about a week ago with the peak rates. So hopefully it can only go down from here, we all hope. But let's check out the other options if our customer doesn't qualify for one of these conventional programs. Typically, the next option, we'll set the same exact scenario, is an FHA program. FHA does allow a little more leniency on credit issues, as well as a much higher debt-to-income ratio. So we'll keep everything else exactly the same so we can compare APR, apples to apples across the programs. So let's check out the FHA options this morning. And FHA, I think, went down just a touch from yesterday, but 6.625 rate, 0.625 discount points in cost, puts our final APR at 7.205. So in this case, as it has been for the last few months, pretty much all this year, the FHA is a touch cheaper for our customer that qualifies for both, or if our customer requires to use FHA, obviously it's a pleasant surprise that the FHA is cheaper in some instances here than even conventional, even with the mortgage insurance required. Now, where we love to specialize is if our customer, for any reason, can't qualify for conventional or FHA. Many other banks or lenders can't help, but that's where we specialize here at the Mortgage Calculator with our 5,000 additional programs under expanded guidelines where we can use alternative income. So these programs are beyond the standard programs. To pull these up, we'll keep everything else exactly the same, but now we have a new option for income. So full doc is what we use for FHA and conventional. That's 2 years of tax returns. So if our customer doesn't qualify for FHA or conventional, typically we're using a non-QM option to take advantage of one of these others, such as asset related, business bank statement. Our investor programs are just for investment properties. We'll talk about that in a minute. Our personal bank statement 12-month is the most popular program by far. That's what we use for the demo. We also have RSU, stated income, VOE, 1099, P&L, no income, all kinds of different options. The 12-month personal bank statement is definitely the most popular for someone looking for a primary home, and that's for our self-employed borrowers. Many times when our self-employed borrowers submit 2 years of tax returns, they may have various write-offs or may have issues qualifying in general, or just may not quite have enough income using those traditional income calculation methods. So we'll solve that problem here by using no tax returns at all, just their last 12 bank statements to determine a debt to income ratio of 40% in this example, using just their cash in the bank, no tax returns involved. Many self-employed borrowers will qualify for double or triple the income and can therefore get the home they really want. So let me pull up the bank statement options this morning. So these non-QM programs, obviously a little higher cost, but very comparable, especially right now. So our best option here, 7.5 rate, 2.25 discount points in cost, so a little more cost here for the non-QM options for bank statements. Puts our final APR at 7.608. So almost identical to conventional today, just a touch higher. So a great option for our borrowers that need a little bit of extra help. And if we scroll down here, you'll notice we have dozens, even hundreds of versions of these programs using alternative income. Some of these are a little bit higher rate and cost, may allow us to calculate income differently, and may allow us to still offer a loan with a bankruptcy or foreclosure or other credit type of event. So tons of different options here allow us to get around other guidelines as well. Now, before we go into Jose's second mortgage example using bank statements, which obviously I can't just pull up here instantly, going to do our investment properties. So we love to work with investors. So our final two live rates we always do for an investment property. We'll set up the same scenario, 80% loan to value, 20% down payment, and we'll compare our investment property options. We have conforming conventional options, and we have non-QM options. Remember, government programs, FHA, VA, USDA do not work for investments. So we'll set conforming conventional. Everything else will stay exactly the same as our other demos. All we've changed here is the occupancy to investment property. So we can see the adjustments that conventional programs have. So the best option here for a conventional investment is going to be 7.625 rate, which is a great rate, but very high discount points here, 3.75 discount points. Puts our final APR at 7.883. So this is a good option for our customers that want to take advantage of conventional programs. However, most investors ask for an alternative, and there are no alternatives for conventional here with lower discount points. So most investors would rather save this $15,000 in this example in order to invest elsewhere. So that's where our non-QM options come in. So let's go back to the pricing tool and we'll set up our final demo here. Investment property, ADLTV, same as before. And this time we'll do expanded guidelines for investment property, also known as non-QM. So our most popular income option by far for an investment property is going to be our DSCR option. That's because it doesn't require any income or employment from our borrower. We simply use the rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the mortgage expenses, the PITIA of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.00 or higher. We even have options for ratios under 1.00 where the property does not quite cash flow monthly. For the demo, we put 1.5 as we do every morning so we can see all the options pop up. And the final thing is a prepayment penalty. 3 years is standard for these non-QM investment properties. However, we can choose 0. That will limit the loan programs and cost more. Or we could also check out 5 years. That will again limit the loan programs and save our borrower some money. But 3 years is the most common, so that's what we always use for our demo so we can see all the different programs. So let's check out the DSCR options this morning. Very nice, just a touch higher than conventional here on the APR. So best option here, 7.875, but 0.725 discount points in costs. So we went from $15,000 in costs for conventional for almost the same rate to now $2,900 in costs for our DSCR option. So most investors, I'd say 99% of investors that are presented these two options, when the APR is 7.932 compared to 7.8 something, almost identical APR, will choose a DSCR program. No income, no employment, much easier and more flexible loan, and obviously less out-of-pocket costs here in this example. There's also a ton of different options here. You'll see we have dozens of different DSCR options. Again, some may allow bankruptcies and foreclosures and other types of issues that would cause a customer to not qualify. And some of these may allow us to use short-term rental income, which is a very popular request. So let's go ahead and switch gears into Jose's example, which unfortunately we don't get to do live ever, which is our second mortgages. So the last couple days, we've been going over different second lien options. On Tuesday, we went over HELOCs, which is open-ended second lien, typically, home equity line of credit, which is different than what we did yesterday, which was a fixed rate second mortgage. And then today, we're going to go over our super cool options for fixed rate second mortgages using alternative income. So Jose teased it yesterday a little bit there, but I'm sure you have a couple more examples for us today to get more into the bank statement specific options. So if you're ready, Jose, go ahead and take it over and let's check out the options.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. HE-loans, as you all know, are a very popular segment right now in lending. A HE-loan, as opposed to a HELOC, as Nick was stating, the HE-loan is a closed-end second mortgage. That means it's a fixed rate, fully amortizing product, as opposed to the HELOC, which is an open-ended product. You only pay on what you owe, but again, it is a variable rate. And right now, there is a lot of volatility in the market, so we're getting a lot of investors and borrowers in general that are choosing the HE loan option as a better way to plan. The HE loan, also, as you will see today, has the advantage of being able to use bank statements or alternative docs. I mean, bank statement isn't the only alt doc option we have for the HELOAN. We also have the profit and loss option and the DSCR option. Now, the bank statement option, as we all know, is for our self-employed borrowers only. You could be self-employed and have W-2 income as well, right? But in this example, we're going to be giving you the quotes for the bank statement portion, right? Even though if you were mixed income with bank statement and W-2, it would be priced as a bank statement loan, no matter what additional type of income you would have. So let me share our options with you. Our first option is for a 1 unit primary property, maximum LTV of 90%. And again, this is using 12 months. Bank statements could be business, could be personal. Even though we are using only 12 months worth of statements, the last 12 months, the borrower does have to have been self-employed for at least 2 years. And they are looking for the business to also have been in existence for at least 2 years. So here we have 11.625 with a little bit of a lender credit, and you can buy it down all the way to 10.375%. So now we have an 85% LTV here. So let's just look at this one again a minute. We had 11.65 with a little bit of a lender credit, $85. Here, same example, lender credit amount increases to 260 at 11.625. And you can buy this down to 10.375. And this is for a 1 unit as well, 85% LTV. So now our investment option, maximum LTV is 80%. This one here is for a 1 unit. So you do see the rate does increase from 11.625 to 12.75 with a little bit of a lender credit, and you can buy that down to 11.75% for our 1 unit at 80%. So now we have the same 1 unit at 75%, just showing you a little bit of the rate variations here. It's 12.625, whereas it was 12.75 at 80%. 75 is 12.625 with a little bit higher lender credit at our 75% LTV for our 1 unit property. So our last two examples here are for 2 to 4 unit properties. We definitely love those house hackers here at the Mortgage Calculator. So on our 2 to 4 unit property at an 80% LTV, we're looking at 12.625 with a little bit of a lender credit, and you can buy that down to 11.75. And for our primary 2 to 4 unit, you're looking at 11.125, and you can buy that down to 9.99%. And that is at a max LTV of 85% as opposed to 90% for the 1 unit. So very good loan options for our bank statement borrowers or self-employed borrowers. This is a great segment that has opened up. So now all of our primary borrowers and investors that are self-employed can take advantage of the loan opportunities out there. Great opportunity to access equity without having to touch your low interest first mortgage.
All right, I don't see any questions. But Jose, you talked about how popular this is because of the recent, rates rising. So why is this such a popular product right now?
Well, we're having rising rates. We're also having rising property values, right? And we're having, especially investors looking to tap in to purchase additional properties to keep taking advantage of the rising rents. But they may not want to touch that low 2.5 or 3% interest first mortgage. So this lets them tap into their property's equity without having to give up that great low rate on that first mortgage. And we do have blended rate calculators as well. So, when you are discussing these deals with the borrower, you can provide to them the blended rate, which would be the combined rate, combining their current existing first mortgage plus the proposed second mortgage, gives you a blended interest rate. And when you do discuss those terms with the borrowers, they definitely see the value of this second mortgage HELOAN.
And that goes back to being a consultant, right? Taking the time to find the blended rate, to find the different options that your client may want to go and present with multiple options. Jose is always about presenting multiple options, right?
Yeah, you have to empower the borrower. Definitely, you want them to make an educated decision. Makes it a lot easier when they know exactly what they're dealing with. If you just throw a second mortgage rate out there on its own, they may think it looks a little bit high. But when you explain the value of the product, including the blended rate scenario, they definitely see the value. And then obviously we have to tie that all in with what is their objective, right? uh, Tie it all into their objective, then we can usually show them the savings. Plus, if they are looking to purchase a property, then that's a whole additional analysis there because now they're being able to purchase this property and take advantage of the great other options that we have for investment property loans.
All right. Well, I don't see any questions, so I think we can wrap it up. Remember, we do this show 11 a.m. Eastern every single weekday. Hold on, there is one question that came in. The DSCR HELOAN product does exit or exist, just to confirm.
Yes, it does. It does exist. Now you have to be very careful when pricing it to make sure you have compliant pricing, but it definitely does exist.
All right, great. Well, we appreciate everybody tuning in. We'll be right back here tomorrow with a new topic to go over. So we appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. And we'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.